If you can earn 10%, in math, there's something called the rule of 70 seconds. You take the interest rate, divide it into 72, it tells you how long before your principal doubles. If you can get 10% in a treasury in 7.2 years, your principal doubles. Why would you buy gold if in a stable environment you can double your money every 7 years, or buy an asset that pays no yield, has no interest attached to it? So that's the inverse relationship between the two. Now I'm going to answer your questions in two ways. Do I think the governments will be forced to pivot? Well, that's what the bond traders will tell you. That's why you see an inverted yield curve. The inversion of the yield curve, maybe the most inverted it's ever been, or for the longest period of time. Number one, it always precedes every single inverted yield curve since 1950 has preceded a massive, or at least a recession. This would be a massive one based upon the length and the depth of the inversion. But it also, basically what it's saying is that we'll pay you more money for a 3-month or a 2-year treasury than we will for a 10-year treasury, because they're saying that as we get further down the line that the Fed will have to pivot. They will have to lower rates again because the economy will break. That's the conventional wisdom. If the country was stable and everything got back to normal again, and you saw interest rates where they are right now or escalating even higher, yeah, gold's in trouble, because you can earn, in a 3-month treasury right now, 5.5%. By the way, when you talk about how fast it's gone up, the beginning of 2022, that 3-month treasury was 0.06%. Now it's about 5.5%. The speed at which they raised interest rates, and you wonder if there's something more behind it. I do, and we can talk about that as we go along, but still hasn't gone up high enough to make the return on these investments anything other than zero, maybe very slightly positive using their inflation numbers. The real inflation numbers were still negative. But here's the point. The question becomes, how bad does it get? In my mind's eye, I see a period of time where these countries say we're not taking dollars for oil anymore. And you have to understand, and maybe that doesn't happen for a while, and maybe they don't say we're not taking dollars, but we're taking other currencies too. And I say that because it's the synthetic demand that has been created out of our protection of the Saudi kingdom for 50 years. The agreement is OPEC will value oil in dollars, and then we'll take the proceeds and recycle them into U.S. treasuries. Well, what did I tell you about Saudi Arabia? They're at their lowest level in the last 6 years in terms of treasury holdings. They're selling them. Every country on the planet has had to stockpile dollars for 50 years to buy oil. So is it out of the question to think that all of these countries that are joining together against the Western hegemony, all of the OPEC countries that are on the Belt Road, all of these new Iran, UAE, Saudi Arabia, are you kidding me? You're talking 50% of the world's oil right there. And then you got Russia on top of it, the second largest oil producer in the world. Do you see a trend where all of these countries are moving away from the West and they're self-sufficient as it comes to energy and natural resources? U.S. is going green. They're going to inflate to continue to meet these obligations that they've become a banana republic. And what happens when they say we're taking other currencies? And every one of these countries dump dollars. Now, I don't care what the Fed wants to do. If half the world dumps dollars simultaneously because they no longer need to hold them, and many of them don't like the U.S., it would be their way of saying, doing this to the U.S., we don't like you anyway, here's your dollars back. The byproduct of that tsunami of inflation is massively spiked interest rates that the Fed can't control. The Fed can't go in and buy the back end of the bond to that degree without destroying the currency. And so when that happens, interest rates spike to the moon. But what I'm saying is this time, I think it'll be a little bit different. Yes, to his point, in a rising real interest rate environment, gold would do poorly. But think of what happens if rates go high enough. What happens to the economy? Stocks, bonds, and real estate collapse. And all of these asset prices have been blown sky high due to years of suppressed interest rates and 4 years worth of money creation that was greater than the history of the United States preceding it. And so those asset prices, which have been distorted massively, real estate, stocks, and bonds, in a rising interest rate environment, cross the line of it being a religious experience. So Yes, that is why the bond market says they will have to pivot and lower rates again. But when they do that, what are they saying to the world? We give up. We give up. We'll never normalize our balance sheet. We're sorry. What makes the dollar, and all of this factors into gold, there are three things, in my opinion. One, the petrodollar. Well, we saw what's happened there. Two, the full faith, and three, credit of the United States. Full faith and credit. Well, let's look at number three, credit. What happened? 2022 balance sheet, 155 trillion in debt, 5 trillion in assets, 125% debt to GDP. We are a banana republic. We're insolvent. So we're not really in terms of credit worthiness. Look at what Moody's did. Downgraded the US debt. And they should have done it a long time ago and should have done it more. If it was another country, it would have been downgraded exponentially more and a lot longer ago. What do I think about all of this stuff, Jesse? Gold and silver are going to go higher than anyone thinks possible at some point, because the dollar in which we measure it against is inordinately strong, so much so that on Monday of this week, a couple days ago, gold hit all-time highs against the second and third largest economies of the world, that being China and Japan. You look at a chart of the 30 largest economies of the world, and gold is at or near all-time highs in every one of them. What does that tell you? Gold's doing its job around the world. It's the inordinate, unjustified, manipulated strength of a dollar that is broke in a country that is disunified and upside down from what it once was. And I hope to God we find our way back. But that strength of the dollar is unjustified. And there will come a time, I believe, when the rest of the world finds a new alternative and pushes back against it. If interest rates are strong in a stable currency, there's no need for gold. You can make a nice return and double your money in a nice period of time without, holding an asset that doesn't pay any return. But in an environment we find ourselves in, where there is chaos everywhere, and we haven't even begun to see how it all plays out, then yeah, I don't think that the rising interest rates that we've seen will have any impact on gold. And maybe that's why the central banks, the ones holding it up by buying more than they have any time in the history of the central banking, realize that it doesn't matter. None of this matters if it plays out the way that we're talking about here. I am someone who comes from nothing, who built a company from a loan from my dad's best friend, whose middle name was Franklin, and recently eclipsed $9 billion in sales without a customer complaint because of the wonderful opportunities the United States has afforded me and my family. Hard work, stick-to-itiveness, keep your nose clean, and you can do anything you can dream of. I never would have dreamt I would have got to where I am, and I thank God every day for this country, but look at what's happened to it.